Futures on major U.S. stock indices are trading lower on Friday ahead of the Non-Farm Payrolls report. The U.S. dollar is adding gains in anticipation of the U.S. jobs data. The U.S. unemployment rate has fallen sharply. Futures on WTI and Brent crude oil have advanced. The greenback is likely to rise against the Canadian dollar. In intraday trading, futures on the Dow Jones Industrial Average grew by 0.1% to 28,378.5 points. The NASDAQ index fell by 1.4% to 11,638.62, and the S&P slid by 0.3% to 3,451.25 points. Later in the course of trading, the U.S. unemployment data for August will be unveiled. This figure is projected to decline to 9.8% from 10.2% in July. Analysts also estimated that the number of jobs in non-agricultural sectors of the country's economy surged by 1.4 million after an increase of 1.7 million a month earlier. The unemployment rate showed a sharper than expected decrease to 8.4% from 10.2% in July. The participation rate increased to 61.7% from 61.4%. Meanwhile, the US dollar and other majors failed to gain momentum. The US dollar index dipped below 93. Oil prices rebounded quickly as panic over the threat of a supply glut had subsided. WTI futures rose 1% to $41.75 per barrel. The price recovered after its sluggish test of the $40 level, which has been the bottom of the range for the past 3 months. Brent crude oil futures added 0.7% to $44.38 per barrel, while gasoline futures returned to the level of $1.20 per gallon. Speaking about the US dollar versus Canadian dollar pair, the greenback is likely to resume its uptrend. This week, the currency has already reached the important level of 1.3000. The Bank of Canada closely monitors the trajectory of the Canadian dollar at a time of the collapse in oil prices and other factors. Ahead of the news release, the greenback versus loonie pair faced resistance at the level of 131.40. If the price does not make any downward movement, the pair will most likely return back to 1.3120 and consolidate above 1.3140. Such a scenario could lead to increased demand for the US currency. In general, many indicators depend on the US labor market statistics. And that's all for today. Thank you for watching. We wish you a nice weekend and we will see you back on Monday. Bye.